Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on the tech sector, still on fire, still hitting all-time highs, still closing at the high of the day for the 5th day in a row, and it is astounding and it continues. So, all-time high 56.13, we're looking at 56.50 as resistance from here. There is absolutely no slowdown, and in the past month we've just seen a straight shot to the upside with nothing but bull flags of consolidation. Cannot have a stronger month. Weekly time frame, 5 weeks in a row of green. 56.30 is the weekly upper Bollinger Band resistance. By the time we get up there, it'll tick up a few pennies. So that is going to be the resistance level to watch in the short term. And there is just nothing bearish you can possibly say about this chart. It is driving the S&P 500 higher. It's holding up the whole market due to the weight of the market in the tech sector. And it's extremely strong. There is no slowdown. There's a lot, and when we do consolidate, anything above 55.10 is going to continue to hold this bullish pattern in full control. Apple is another bull flag as well. So we saw the correlation yesterday in the video and highlighted how some of the high beta names, the leaders, were seeing weakness, even though the market or the sector, the tech sector, was seeing new all-time highs. And the same thing happened today with Apple hitting a lower high and a lower low. We saw with Apple, Facebook, and Netflix. And it was with Amazon yesterday. Amazon bulls showed up today and shook that off. But those other three names stayed weak compared to the sector. So this is a bull flag. We've seen Apple form 2 bull flags in the past 2 weeks, confirming both of them, and that's what the bulls are hoping for again. There's lower wicks with bulls buying the dip. We're holding the 4-period exponential moving average support. We're seeing decreasing bear volume, and we're looking for continuation and a new all-time high if all of this keeps playing out as it has been. So key support in the short term is 154.72. If we break 154.72 tomorrow, that makes the odds of a bull flag a little bit less likely. Still possible, but the bulls want that to be our low, and they want to start heading back up towards 156.65. Weekly time frame shows a tight range of consolidation after a very strong bull break. Nothing really bearish here unless we were to lose the higher low pattern on the daily time frame, which certainly is not at risk at this point. Facebook seeing that weakness as well. We are still in this tightening range. Look at the wicks that are dictating our higher low, lower high equilibrium pattern. All-time high, earnings low. Lower high, higher low, lower high, higher low. Break is imminent. Middle Bollinger Band support is going to be a factor now as that heads up to the 150 level tomorrow. And the range to be watching is 149.03 support and 150.148 resistance. And an example of a trade today, we were watching the 5-minute time frame and we were oversold on Facebook and the market was pulling back. And someone said, we have a bounce beginning to play out in Facebook, oversold bounce. And I looked at it and I said, on the 5-minute time frame, I said, this bounce is anticipated to be short-lived. The bears are in full control. And then I pulled out and I looked at the daily chart and I said, oh yeah, we're in this equilibrium pattern. It's more likely than not that the bulls are going to defend 148.86 and form a higher low into that pattern. So I immediately shifted my perspective and said, okay, we're currently 17 cents above this key support. I'm going to be looking for this little oversold bounce to have a bit more momentum behind it. I'm going to be looking for the bulls to defend this low a bit more significantly than I would be otherwise. And it ended up being a nice bounce off of that low over $1 to the upside. So a very tight range on Facebook. 3 trading days left to go. There's those inside bars on the weekly time frame showing us the macro version of that equilibrium pattern. And we're watching for a break of the range of last week to indicate whether or not we're going to see a bull or bear break. And that will indicate the short-term direction. So with 3 trading days left to go, we don't have to break this range within that time frame. It's more likely than not that we will. But watching this range now, the high of yesterday and the low of today, as it's very clear things are getting tight. So I appreciate you watching. Keep an eye on that Facebook tight pattern and the tech sector still on fire. Have a great night.